Equities at PGIM India Asset Management, joining us. Hi Vivek, great to be speaking with you. A very good afternoon. Firstly, help us with your outlook on the markets, because of late a lot of global news flow that has been hitting the Indian markets. We are left no behind, but somewhere we have seen and we have shown rather a bit of a resilience. Give us some sense that from here on, where do you see the Indian markets headed? What are the risk factors that could be at play, if any?
Thanks and good afternoon to all the viewers. As you rightly pointed out, we are seeing a bit of volatility and some bit of exuberance also coming back in Indian markets. This is on the back of both a blend of positive and negative events. There has been some uncertainty with respect to geopolitical conflicts, wars, tariffs, which were the dampeners in the recent past. However, there have been positives also. Interest rates are trending lower, inflation is also trending lower. High frequency indicators such as CV registrations, exports, industrial activity, rural consumption, positive FII flows have kind of buoyed the markets. So it is a blend of positive or negative. But if I take a slightly longer term view, I think the India growth story is still very much on. While there are near-term hiccups that we are seeing in terms of slowdown, in terms of investment demand, some bit of consumption slowdown, but the positive impact of lower interest rates, lower inflation, possibly lower taxes, which are expected to come from FY26. So that should help the growth in India fairly. The 6%, 6.5% kind of growth on a real basis, double-digit kind of nominal growth still is very much possible for the medium to longer term view. So from a long term, as a long-term investor, I would not be worried. However, there are near-term concerns which are always there in equity markets, but they are most likely transient in nature.
All right. Hi, Vivek. This is Kanishka also joining in. I actually want to get your sectoral view there. Since earnings have also, we are at the fag end of the earnings. So what are your preferred bets in terms of sectors right now? And after the earnings growth, are you looking to make any changes or rotate any sectors in your portfolio?
I'm not able to hear you properly.
Hi. Yeah. Hi, Vivek. Can you hear me now?
Yeah, perfect.
Yeah. Now, I just wanted to get your sectoral view. What are your, which sectors are looking attractive to you right now, and which are the ones that you would like to avoid at this point in time, especially since we are at the fag of end of earnings, and we have seen, most companies report their earnings. So given the kind of growth that we have seen in this quarter, are you looking to rotate any sectors in your portfolio?
So generally, we would be positive on sectors and stocks which offer a fairly structural growth story for a country like India, which is largely inward looking. And given the fact that there is a lot of uncertainty globally, so our portfolios are positioned towards sectors which are more inward looking. So if I look through that lens, healthcare, consumption, financials, lending financials, especially the high quality ones, are something which are of where we are overweight and we are positive on. And sectors which have an outward bias or are dependent on global events or what is happening in the Western world, such as IT, commodity, oil and gas, those are the sectors where we would be negative, given the fact that there is a lot of uncertainty in the global markets. Things seems to be volatile, so it is better to stick to stories or sectors where the structural growth story is very much intact, and there is a reasonable valuation comfort as well.
Vivek, also elaborate consumption for us. When you say that you're bullish on the consumption theme, then which pocket are you most bullish on? Because a lot of these experts we speak to, they are bullish on the discretionary spending that is expected to pick up, especially highlighting the white goods. They can do better, they have a long growth trajectory. But within consumption, what are your preferred bets?
So if you look at the consumption basket in India, let's divide them into two buckets. Let's say the staples, and let's say the other one being discretionary. Staple companies typically grow at a growth rate, but the growth rates itself are not very high, given the fact that most of the categories are fairly well penetrated. On the other hand, on the discretionary side, India is a country where per capita income is on the rise, but it is not very high. And as and when the per capita income rises, the availability and affordability of certain discretionary goods and services become possible, and hence the growth rates possible on the discretionary side in categories such as eating out, retail, apparels, QSRs. There are quite a few sectors which fit into that category wherein it's discretionary in nature, not very high ticket size necessarily, but offer a very good growth path from a longer term perspective. So these are the buckets within. We would be positive on discretionary, and discretionary within discretionary it would be retail, apparel, eating out trends. That is something we would be fairly positive on.
All right, Vivek, with this, we let you go. Thank you so much for taking the time out and speaking with us. Looking forward to more.
Thank
But
you. It
with
was a pleasure to be on your.
Thank you so much. But